everyone, welcome back to another episode of Full Disclosure. It's Sunday. We're here on location in Scottsdale, Arizona, one of my favorite resorts called the Omni Resort. And if you ever have a chance, you've got to check this place out. Absolutely amazing. We've got a big show, huge stacked show lined up today as I dive deep into the 5 investing secrets that turned Warren Buffett into a multi-billionaire. And I'm going to show you where you can go to see Buffett's actual stock holdings right now that are updated on a quarterly basis that you can just follow along and place the exact same trades that Warren Buffett is making, which is a very common strategy that a lot of successful investors do, including myself. We simply just let Warren Buffett do our research. So whether you're just starting out or you're closer to retirement, these strategies and tips will help you build wealth just like Warren Buffett and the pros. Plus, got one of the scariest, most eye-opening sound clips you have ever heard in your life, coming from an extremely powerful person that is a key source of why inflation is through the roof and our economy is teetering on failure. You know exactly why when you see this clip, so you do not want to miss this. It will piece everything together why this country is drowning. And lastly, I do want to cover some crucial current events that you need to know and be aware of. Remember, knowledge is power, right? Before we dive in, don't forget to hit that bell below and subscribe. I'd also love to hear your thoughts and comments and feedback in the sections below. Let me know what you're thinking and where you're spotting opportunities. Also, my cash flow and wealth building system has been getting a lot of attention lately. Using Warren Buffett's investment strategy, I teach a very simple strategy to enhance those returns using options to create instant cash flow with every single trade. And no, it's not day trading. I guarantee you it's not day. I certainly don't have time to day trade, and you probably don't as well. In fact, just a couple of days ago, I mentioned on Instagram that despite recently having back surgery, I'm still able to trade from my bed with my smartphone. And that's how simple this is. In fact, in less than, it was about 23 minutes, I made over $8,213 to be exact, just lying down while I'm recovering from my surgery, trading the same stocks repeatedly week after week, generating consistent income over time. And I did that video on Instagram, and you can check that out and watch it. And you can also get more details at go.johnmacgregor.net. Check it out. It's a video overview of the program, and I think you'll find it super interesting. And if you're interested, you can schedule some time to speak with me or someone on my team to learn more. All right. So with that, let's get started. Before we jump into Warren Buffett's strategies, I do want to highlight some critical economic stories that are happening right now. I mean, there's a lot going on, right? As you know, and it's crucial that you stay informed. That's why you're watching this show. And I want to start with a soundbite from this guy named Jared Bernstein. And he is the chairman, remember this title, the chairman of the U.S. Council of Economic Advisors and a key economic advisor, if not the leading economic advisor to President Joe Biden. So check this one out. Holy moly.
The U.S. government can't go bankrupt because we can print our own money.
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, cause it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
What? So despite his background solely in music and social work, he's making significant economic decisions that are affecting our lives. And he has no idea how the economy works and how the Fed controls monetary policy. And yet he's the chairman of the U.S. Council of Economic Advisors and Biden's key economic go-to guy. I mean, he says the U.S. can't go bankrupt because it can print its own money. Are you serious? I mean, talk about dangerous oversimplification, especially when we face, as I talk about all the time, national debt of $35 trillion, potentially rising to $55 trillion in just a few short years. We're adding $1 trillion of new debt every single 100 days. I mean, this kind of thinking is alarming when you consider the qualifications necessary to handle this massive economy. All right, our next story. As you might expect, the Biden administration is pushing new regulations. Here we go again, that could significantly impact our wallets. Well, it will significantly impact our wallets. And the latest, get this, involves air conditioning. That's right, air conditioning. Here we go. New efficiency standards will increase the cost dramatically. And it's just one example of how excessive regulations can affect everyday life for all of us. Remember, first it was light bulbs, then it was gas stoves, then it was wood-fired pizzas, ceiling fans, now it's lawnmowers, leaf blowers, weed whackers. As I just mentioned, air conditioning units. It's just going to cause the price to skyrocket for all of this stuff. And of course, don't forget the electric vehicles and trucks they're mandating. Oh, by the way, get this one. I just heard this from a Swiss banker at our old favorite World Economic Forum. You know, that communist fascist organization run by Klaus Schwab, the guys that want to control every aspect of our lives. He wants the Swiss banker he wants to prevent us from drinking coffee. Coffee. And I'm not making this up. That's right, coffee, because it contributes too much to the atmosphere or too much CO2 in the whatever it is, whatever nonsense they're spewing. I mean, can these people just get out of our lives, please, and just leave us alone? Seriously, just leave us alone. They want to control us like robots, but this is getting insane. All right, another development to keep an eye on. Recently reported that many small and regional banks across the U.S. are under significant stress. And there's a group called the Claros Group that did a report and found that roughly 300 banks, small and regional banks, are under considerable distress. And by the way, my recommendation to you, I would not have my money in a smaller regional bank. There's just too much risk of failure, especially with interest rates where they are and where I think they're going to go, which is higher. Now, the good news is from this report, while most aren't close to insolvency, the pressure of commercial real estate loans and higher interest rates are creating significant risk. Smaller and regional banks have a majority of these commercial loans, and the commercial loan industry, even the commercial real estate industry, is not looking too strong right now. And if rates stay where they are or continue to climb, which I think they will, insolvency is definitely on the table. So another reason to hit subscribe, stay tuned on the show, because I'll keep you posted on that development. Two more things before we get to Warren Buffett. I want to touch on Argentina. It's a really important story. It was once a thriving country, one of the most successful countries in the world, which was then ultimately taken over by a socialist leadership. And literally they destroyed this beautiful and wonderful country fairly quickly, where now over 40% of people live in poverty and inflation is over 300%. So the people finally woke up and they had enough, and they elected this wild man, a tough guy, which is a good thing. And he's a hard conservative, and he's taken on the beast with capitalism and conservative principles that's completely, radically changing this country for the better in a very, very quick manner. And get this, inflation is down from 300% to 11%. He just took over this country like 5 or 6 months ago. Now they have the first quarterly budget surplus since 2008, which is astonishing in such a short space of time, especially for a country that has run deficits for 113 of the last 123 years. And now they're looking at a budget surplus. Get this one. The Argentine peso, that's their currency. It's the world's best performing currency right now. That's right, the world's best performing currency. Borrowing costs have dropped. People will soon see incomes rising. He's made massive, massive cuts of overstuffed bureaucratic agencies, and now he's slated to slash 70,000 unneeded state employee jobs. He's drastically reducing these socialist regulations, and as a result, we're seeing an economy that's lifting up like it hasn't seen in many, many years. Now, it's not all rosy, of course. He's got a long road ahead of him and a lot of resistance from the deep socialist state. But this guy is an absolute fighter and he knows what's best for the people. And now the whole world is seeing the tremendous results of what capitalism and conservative principles can do for a country. Even the housing sector has completely turned around in a very short period of time due to deregulation of rent control. That's right. He deregulated rent control, which, by the way, proves and is a lesson that rent control does not work. Are you thinking what I'm thinking? Please, please bring this guy here to this country because we desperately need this type of courage more than ever. Folks, it just proves that elections have consequences. I mean, just look what's going on in this country. And this is a clear example of that. It's also a clear example of the people in power here in the United States and how they are destroying this country with left-wing progressive ideology, all for one reason, and that's power and control over our lives. That's the only reason they're doing all of this stuff. So the last thing I want to say before we dive into Buffett, on that previous note about Argentina and Javier Milei, the new president, is I want you to ask yourself and think about this. Are you better off today than you were 4 years ago or 3.5 years ago when Biden took over? And I want to journey back to March of 2020 when the average gas price was $1.99. Today, it has soared. It's at $3.53 a gallon. California, where I live, way over $5. The average 30-year mortgage rate then was 3.29%. Now it stands at 7.2%. We're seeing a significant uptick in the cost of living, as you all know, as you go to the grocery store and restaurants or whatever else you do, all products and services that you buy. Food prices have increased by 25%, rent by 23%, credit card debt has spiked by 47%, now surpassing $1 trillion for the first time. And a lot of these credit cards have interest rates north of 20%, which is just crushing people. And by the way, on inflation, when you hear the administration come out and say, oh, we've tamed inflation, inflation's way down, look how great we are. Yes, the level of growth of inflation has slowed down, but things are still getting more and more expensive. They haven't done anything to get these costs down. So the rate of growth of inflation has slowed, but that hasn't affected anything that we currently buy or use. So keep that in mind when you hear this nonsense that they've tamed inflation. That's just not true. That's a total spin job. I will add, homelessness, crime rates have dramatically risen over the last 3.5 years, compounded by a border crisis and an alarming influx of fentanyl that's killing 100,000 people every single year here in this country and worldwide. Of course, 100,000 people are dying from fentanyl. That's 2 Vietnams every single year. I will say there is one notable decline in all of this, sadly, and that's national pride. Today, unlike any other period in our country's history, 34% of Americans, that's 1/3 of the population, would prefer to live in a different country. And the previous peak was 13% back in 1972. Think about that. People no longer want to live in this country. And I get it. I do hope a big portion of those people are from Hollywood that want to leave. But I'll tell you, my wife and I have this conversation all the time. I mean, do we want to continue living in this country under these policies, under these regulations and these controls and these high taxes and this inflation and this crime and this border and this education system? I mean, we often feel like we're sailing on the Titanic. So we haven't decided yet, but it's highly likely that we will leave as well. So this trend does not look well for our economy or our financial future, right? I mean, that's just common sense. And that's precisely why it's more than ever, more critical than ever, to you must take charge of your financial situation and not depend on others, especially the government. And again, that's why you're here. All right. So what you all been waiting for. Let's dive into some really good stuff now, right? And I want to talk about what many call Warren Buffett's secret to investing, his 5 secrets. And now, just to set things straight, these aren't secrets. I use this term because even though most folks know these principles, it's available online, surprisingly few people actually follow them. Everyone, in the 30 years that I've been working with thousands of people of all walks of life, everyone seems to be chasing that quick fortune, which, let's be honest, isn't the way to sustainably build and maintain wealth. Over my 30 years in finance, I have seen too many people get sidetracked by the latest hot stock pick or some flashy new investment scheme, all hoping for that big payoff overnight. And you've heard me say this a million times. Hope is not an investment strategy. Hope is definitely not a retirement strategy. But let's be real. Unless you're unbelievably lucky, like winning the lottery 3 times lucky, you're not going to strike it rich overnight. It just doesn't happen. Successful investing and making money can actually be pretty straightforward and simple when you just follow what has worked for successful investors before, like Buffett, which we'll get into. You understand their missteps that they've made. Mistakes always happen. That's where you learn. And then you consistently apply the strategies consistently over time, and you just follow that recipe over and over and over again. And that's precisely what I've done and why I've been able to achieve financial independence at a very, very young age. And I guarantee you, you can be doing the exact same thing. It is not challenging, folks. And the best part is you don't need to be a financial wizard or have a fancy degree or have any financial literacy. Heck, you don't even need to start with a lot of money. I started small, just like many, many others, just like Warren Buffett. In fact, I just saw this example today, and it's a great, great example that hopefully will open your eyes, and I think it will. And it was titled The $5 Million Bartender. And let's just call her Lisa. And at the age of 20, Lisa got a bartending job, bartending twice a week. And this was on top of her daily job. Okay. So Friday, Saturday night, she bartended and made $100 each night. Now, it could be bartending, it could be dog walking, it could be an Uber drive, whatever it is. We're just using bartending as an example. So she took that $200 every weekend and she invested it every week into the S&P 500. And the S&P 500 is a basket of the 500 largest stocks in the US. And the S&P 500 has historically produced a 10% average return over time going back 100 years. That's just a fact. Now, that doesn't mean 10% every year. That means up 13 one year, down 2, up 16, down 4. But if you smooth out those returns over time, the S&P 500 had a 10% average rate of return again over time. Now, remember, she started at the age of 20 and she stopped at age 30. So for 10 years, she consistently put $200 a week into this S&P 500 fund and then stopped putting money in it altogether. And then she just let it ride. She wrote it out until she was 65 years old. And I gave it away in the beginning of this, but take a wild guess how much money she has by the time she hits 65. Remember, let me just repeat, from the age of 20 to 30, she put $200 a week into this S&P 500 and then stopped at age 30 and just let it ride until 65. How much money did she have by the time she hit 65? $5.6 million. Folks, that's the power of the stock market and compounding and how just a little bit of money over time can balloon to a massive fortune. I mean, think about what your retirement would look like with $5.6 million. Talk about freedom and talk about peace of mind. Oh my gosh. And a big reason for this, if not the main reason for this, is that she started early. In fact, that was the key. Also, she just kept doing it no matter what was going on in the economy. She consistently kept putting money into it. But no matter how old you are, don't let that dissuade you from starting today. In fact, starting right now. All right, so let's talk about Warren Buffett, often hailed as the greatest investor of all time. And I'm going to show you why in a moment. He has a net worth of well over $131 billion. And it's his long-term approach to investing that not only made him a super wealthy, but he's also taught us heaps about smart investing. So what's the secret sauce behind his success? Well, it all boils down to his unwavering commitment to value investing. And I'll get into that. And his thorough understanding of the industries he invests in. Back in the day, Buffett began his investing journey quite young. And he talks about buying his first stock called Cities Service. And at just 11 years old, and he made a nice little profit. By the time he was 14, he'd saved up $1,000 from various small ventures and investments. And he was had quite the entrepreneurial spirit at a young age. But his real education in investing started at Columbia University under a gentleman by the name of Benjamin Graham. Please remember that name. He is the father of value investing. And here's what value investing means. It's like looking for the best deals in a discount store. It's about finding stocks that are selling for less than they're actually worth. Value investors are like savvy shoppers. They don't chase the latest expensive trends. Instead, they look for solid stocks that seem undervalued compared to the real value. They believe that the stock market can sometimes overreact to news, making stock prices fluctuate in ways that really don't align with the company's long-term fundamentals. And so while everyone else is going after flashy, high-priced growth stocks, value investors are picking up overlooked bargains, betting that eventually the market will recognize their true value. And Benjamin Graham's lessons on spotting undervalued assets had a profound impact on Buffett and shaped his entire investment philosophy. And that's why he's worth $131 billion today. And this discipline has allowed Buffett to build up a massive fortune over time, and a massive fortune for his investors as well. So after his time with Benjamin Graham, Buffett began quickly identifying undervalued companies like Geico Insurance, one of Buffett's most successful investments, which has driven huge returns for him and his investors over the years. And he knew exactly when to strike on that stock. And Buffett's ability to understand all aspects of a deal and stick to his value investing principles really laid the foundation for the legendary success that would follow. And by 1956, he was ready to make major moves, and he founded Buffett Associates Limited Partners, which eventually evolved into the behemoth that is Berkshire Hathaway today. And his strategy has consistently focused on value investing, always looking for companies that are not just undervalued, but also have strong growth potential as well. And this methodical approach has helped Berkshire Hathaway achieve a compounded annual return, are you ready, of 20% since 1965. I mean, that is just outstanding. In a moment, I'm going to share with you how you can actually see the stocks that he's in, because it's public information and it's updated every single quarter. And as I said earlier, many investors just simply follow what he's doing, buying the stocks that he's in. And I cherry pick a lot of his stocks as well for my strategy that I teach. So Buffett's knack for picking long-term winners and avoiding the temptation to trade frequently has maximized the power of compounding interest that we just talked about with Lisa, our bartender. Despite shifts or tweaks in his strategy, which there have been, including recent investments in tech giants like Apple and Amazon, his core approach remains rooted in value investing. And so I want to break down the essentials of what he's doing. First off, you have to understand this. There are no real secrets to investing, despite what some may claim. Most principles, as I said earlier, are very well known. It's just that not many people apply them consistently. Many, as we talked about, are tempted by the allure of quick riches. But I'm telling you, true wealth is built gradually through wise and patient investing. And here's the key. Warren Buffett's investment strategy is profoundly straightforward and again centers on value investing, finding stocks priced less than their actual worth and holding them for a very, very long time, if not forever. So let's get into it. Here are Warren Buffett's 5 basic rules of investing and why he has amassed a huge amount of wealth. Number 1, never lose money. And this rule is more about mindset than literal interpretation. Because look, it's impossible to never lose money in investing, right? No matter what investment you're making. But Buffett stresses the importance of being extremely cautious and avoiding unnecessary risks. It's crucial to thoroughly understand what you're investing in and to maintain a strong aversion to losing money. And a bonus to this first rule, Buffett will often say, rule number 1B is never forget rule number 1A. Number 2, never invest in a business you cannot understand. I see this all the time. Stick to investments within your area of knowledge. If you can't explain how a company makes money, it's probably not a wise investment for you. Cryptocurrency is a perfect example. This reduces risk and helps you avoid ventures that could very well end poorly due to a lack of understanding. If you can't explain the business to somebody else, walk away. Number 3, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Long-term investing is crucial to investment success. Buffett believes in holding stocks indefinitely appreciating the compound returns that accrue over a long period of time. Now, let me just caveat that here. What I teach is that people should have two types of portfolios. A passive portfolio, which is very much the Warren Buffett approach. High quality stocks, buying them at a discount and holding them forever. Collecting the dividends as well and actually reinvesting those dividends on top of that. I also believe in having an active portfolio. That's the strategy I teach. I take a lot of the stocks from Warren Buffett and then I sell options against them to create instant income on every single trade. So again, I think it's really important that people have both an active and a passive portfolio. All right, number 4, never invest with borrowed money. Using borrowed money to invest, often referred to as trading on margin, amplifies both gains, but really amplifies losses. And it can be tempting, but it can lead to catastrophic losses if the market turns against you. And I've seen that happen to a lot of people over the years. So stick to investing money you have, not money you borrow. Finally, number 5, probably his most profound statement and often quoted. He says, be fearful when people are greedy and greedy when people are fearful. And this contrarian strategy involves buying low during market panics and exercising caution when the market is booming. And this scenario is quite common. Remember, the golden rule of investing. What is it? To buy low and sell high, right? However, a common pitfall I've observed over the years is that most people do the exact opposite. They rush to buy stocks, cryptocurrency, other investments when they're at an all-time high. And conversely, when those investments are at their lowest, essentially those great companies are on sale, most people say, no, I don't want to have anything to do with it. And much of this behavior is driven by something called FOMO. It's an acronym. It stands for fear of missing out. And this emotional and psychological reaction has eroded substantial wealth over time. When that stock or crypto or whatever it is, that new shining object is way up here, people think, oh my gosh, I'm missing out. I got to get in. And that's the wrong time to get in. And it's just crazy. When things are down here, that's when no one wants to touch it. And that's the exact opposite of what you should be doing. And so when Warren Buffett advises to be fearful when others are greedy and greedy when others are fearful, he's essentially cautioning against following the herd. That's essentially what FOMO is. And he suggests when things seem too good, be very wary. And when things seem bleak, that's the time to step in and seize the opportunity to make great investments at great prices. And this straightforward rule encapsulates the philosophy that emphasizes patience, understanding, and discipline. And by sticking to these 5 principles, these quote secrets, investors can improve their chance of achieving long-term wealth. Remember, investing isn't just about having capital. It's about making wise decisions with that capital over time. That is the Warren Buffett secret sauce, which has allowed him to become a multi-billionaire. And folks, it is not hard. As I mentioned earlier, all of Buffett's holdings are public information and they're updated on a quarterly basis in a document called 13F. F as in Frank. So if you want to follow along, just Google Berkshire Hathaway 13F and you'll get the latest report showing the stocks that he actually owns right now. And frankly, you could just follow along picking the exact same stocks that Warren Buffett and his team does. Now, one caveat, you got to be careful that you're buying these stocks at the right price because by the time you see that stock in the latest report, it may be outside of its intrinsic value. So don't just jump into a stock simply because he owns it. You still want to make sure you're buying it at the right price. Critical thing to keep in mind. So if you're looking to invest, remember, must do your homework, focus on value, and think long-term. It's not just about having capital, it's about investing it wisely. Now, my twist to this, to enhance my returns, as I mentioned earlier, I buy a lot of the same stocks that Warren Buffett does, and then I sell options against them, which generates instant income on every single trade I make. It's a very, very simple process used by many people. Sadly, most people don't understand or are afraid of this strategy. I also sell options on those stocks that I haven't purchased, again, generating instant income on every one of those trades. It's really easy. It's a very popular strategy, well written about, that many, many people use. Sadly, most people know or are afraid of, which they shouldn't be at all. And as I mentioned earlier, if you want to learn more about the system that I teach, my cash flow wealth building system that I spend 30 minutes a week on, you can go to go.johnmcgregor.net, watch the overview video, and then you'll have an opportunity to schedule a call with me or someone on my team to discuss it in more detail if you want to learn more. All right, so that wraps up today's discussion. I hope this gives you a new perspective on investing, buying great businesses at the right price, and how to turn that into instant cash flow. If you found this helpful, feel free to share this with someone who could benefit from it. We're all in this together. We're all struggling with this economy today, and we all have to help each other. Don't forget, leave a comment below. Would love to hear your thoughts and where you are finding opportunity. Have a great week, and I'll see you next time. Take care.